Hello there. Today we're going to talk about something really important, something that often gets missed when it comes to personal finance, the income tax rules for state pensioners. And trust me, you'll want to listen closely, because this could genuinely put money right back into your pocket.
Now, this entire breakdown comes straight from the experts at My Tax Accountant. And what's really key is that all the figures we're about to discuss are hot off the press, fresh from today's 2025 budget announcement. So you are getting the absolute latest information. Okay, let's get right to the big question, the one you're really here for. If you're married and one of you was born before the 6th of April 1935, could you be missing out on a tax break worth more than £1,100? You know, for a surprising number of people, the answer is yes. Let's find out if you're one of them.
To make sure we cover everything nice and clearly, here's our plan. We'll start with the basics of pensions and tax. Then we'll look at the standard personal allowance. After that, it's the main event, the married couple's allowance. Then we'll see how it all fits together, and finally, where to go for professional help.
Right, let's jump into part one, your pension and your tax. This is the absolute foundation for everything else, so it's the first thing we all need to get our heads around.
So here's the crucial point, the one that catches so many people out. Your state pension is not tax-free. It's considered taxable income. What that means is HMRC adds up your state pension plus any other money you have coming in, maybe from a private pension or a part-time job, and that becomes your total income. Anything over your tax-free allowance is subject to income tax.
And to put some real numbers on that, let's have a look. The full basic state pension for this coming tax year, 2025-26, is £176.45 a week. Over a year, that adds up to just over £9,175. For a lot of folks, that's the biggest chunk of their taxable income.
Okay, now let's build on that with part two. We're talking about the standard personal allowance. The best way to think about this is as your first line of defense against tax. It's the amount of money everyone in the UK can earn before tax kicks in.
And here is that magic number, confirmed in the 2025 budget. For the 2025/26 tax year, your personal allowance is £12,570. Simple as that. You can have a total income up to this amount and you won't pay a single penny in income tax. It's only on the money you earn above this level that the taxman gets a slice.
That's not all. Here's where some people can get caught out. The personal allowance isn't guaranteed for everyone. If your income goes over £100,000, it starts to shrink. For every £2 you earn over that limit, you lose £1 of your allowance. As you can see from the table, by the time your income hits just over £125,000, your entire tax-free allowance is gone.
Okay, now we're getting to the real heart of our chat today. Part 3, the married couple's allowance. This is the hidden gem, the specific tax rule that could be worth a small fortune to a very particular group of pensioners.
So what on earth is it? Well, the married couple's allowance, or MCA for short, is a special tax break, but it has one very strict rule. You have to be married or in a civil partnership, and this is the crucial part, at least one of you must have been born before April 6, 1935. That date is set in stone, which is why a lot of people aren't eligible, and frankly, why those who are often have no idea it even exists. Now listen, it is so important not to get this confused with the marriage allowance. I know, they sound almost identical, but they are completely different beasts. The marriage allowance is much more common. It lets a low earner transfer a bit of their personal allowance to their partner, saving about £252. But the married couple's allowance, well, that's for that specific older generation, and it's worth a whole lot more. And just how much more are we talking? Well, the maximum amount you can slash from your tax bill using the married couple's allowance for the 2025/26 tax year is £1,127. That is a serious chunk of money to have back in your bank account instead of with HMRC. So how do they actually get to that number? Let's break it down, because it works a bit differently. The allowance itself is actually £11,270, but it doesn't just reduce your taxable income. Instead, it acts like a credit. You get a 10% reduction on your final tax bill, which is where that £1,127 saving comes from. Now, there is an income limit. If the higher earner makes over £37,700, the allowance starts to shrink. But, and this is another key point, it never vanishes completely. It has a floor, a minimum amount, which still guarantees you a tax saving of at least £436. And here is a fantastic pro tip for you, straight from the experts at My Tax Accountant. In the tax year that a couple separates, or sadly, one partner passes away, the allowance can still be claimed in full for that entire year. And if the allowance wasn't fully used, any surplus can even be transferred to the surviving spouse. It's a really important detail that can provide some much-needed help during a really difficult time. So, we know what the allowance is and who can get it. Let's move into part 4 and see how this all comes together in the real world. Stay with me. The next point might surprise you.
You might look at your bank statement and see your state pension has been paid in full, with no tax taken off, and that leads a lot of people to believe it's not taxed at all. But that's not what's happening. HMRC knows you're getting it. What they do instead is they adjust your tax code. That code then tells your other income providers, like your old workplace pension scheme, to deduct more tax from that source to cover what you owe on your state pension. It's a clever system, but it can be really confusing if you don't realize what's going on behind the scenes.
But what if the person claiming the allowance doesn't have a big enough tax bill to actually use all of it? Well, the good news is you don't lose out. You can transfer the leftover bit. The process is pretty straightforward. First, you figure out how much is unused. Then, you just need to let HMRC know you want to transfer it using a special form called 575T. Once that's all processed, your partner's tax bill gets reduced, making sure you get every penny of the benefit you're entitled to.
Right, we have covered a lot of ground today. Now for our final section, Part 5, Getting Professional Help. This is all about making sure you take the right next step. So, let's just do a quick recap of those key numbers for the 2025/26 tax year. Your standard personal allowance is £12,570. The full basic state pension comes in at £9,175.40 a year, and that all-important maximum tax saving from the married couple's allowance is £1,127. Those are the big ones to remember.
Okay, now I have to say this, and it's really important. The information we've gone through here is for general guidance only. Everyone's personal tax situation is unique and can be incredibly complex, so please don't rely on this content alone to make big financial decisions.
And that really brings us to the final critical question. After hearing all of that, are you 100% certain you're paying the right amount of tax? Are you positive you're not missing out on allowances you're entitled to?
If there is any doubt at all in your mind, this is where getting some professional advice is an absolute game changer. The experts at My Tax Accountant can give you that clarity and peace of mind. They can check your eligibility for everything, not just the married couple's allowance. They'll make sure your tax code is correct, and they can even handle all the back and forth with HMRC for you. They also specialize in pension tax planning and self-assessment returns.
So, if you want to be certain you've got it right, and you're claiming every single pound you're due, especially that potential £1,127 tax break, my recommendation is to get in touch with the professionals. For expert personalized advice, contact My Tax Accountant today. The number to call is 0208 570 8531, or you can email them at info@mytaxaccountant.co.uk. Thanks so much for joining me.